And thank you for keeping tuned on Smart 24. My name is SSEBAALE, and we are presenting financial markets. Now, as earlier on, I promised that we'll be bringing you experts in this field, people who are going to help you know how, when, and why you should invest. And today I have Mr. Ongura Joram from SBG Securities. Now, Mr. Ongura, we'll kick off the conversation where we left it. We had an argument on small and medium enterprises not being able to partake of this cake on in capital markets. Is there any plan for the small and medium enterprises as well?
Yes, so if I also speak to the actual, from a policy perspective, this is from the regulatory side, is that they're all segments of all business journey segments are allowed to come and list money in our markets. You could be an SME, there are regulations that could allow you to list in the market. You could be a large cap company, they also have avenues for you to list in the market. The regulations are quite there, stipulated, and well, as long as you meet those requirements, then ideally you can come and raise money in the capital market space. The benefit of raising money in the capital market space is that you raise patient capital. So whereas your capital needs may be long term, the challenge we've seen over time is that you have a capital need requirement which is long term, but then you raise money from commercial banks, which is very short term. So by the nature of that, there's a mismatch between your capital needs and actual capital you're raising. So capital markets offers you a platform where you can actually come and raise money. And yes, those regulations are quite there.
Okay. So now let's talk about something to do with collective investment schemes. It's a term that has been used for many people who think that since they have small monies, they can put together and maybe also carry out an investment. Do you have such offers as SBG yet?
Yeah, so we have a license for that specific product. If you went to the CMA website, you will see the license. We are licensed. We, however, are finalizing on launching this product, and hopefully by first half of this year, we'll launch this product. So we definitely would encourage all our customers to reach out to us around half of this year and partake in some of these products.
Yeah. Is that different from mutual funds?
So it's very, in a way, related. It's just the language that's quite different.
Yes, so it's almost the same thing.
It's almost the same thing, yeah.
Oh, okay, right. Interesting right there. So we want to talk about a little bit more about the electronic bit, which you want to introduce to Ugandans. You said you want to develop an app where people can keep track of all the transactions without even coming to your offices online. Talk more about that app and what it will bring, what new thing it will bring on board.
So so one thing that we appreciate nowadays is service at your convenience. You don't have to leave your home and come to our offices to seek service. We are bringing the services to you, and one of the ways of bringing the services to you is through digital channels. So we are currently working on these digital channels, and again, as I mentioned earlier, we're a very regulated industry. We have to go through the normal approval processes. And once we've gotten over the line with those specific, then we eventually launch and ask all of you to take up those channels of accessing some of these products. Thank you.
Yes. Now, MTN, the IPO, which you actually center staged in your when they were actually coming to the public to ask for capital, the prices of shares were somehow fluctuating and so on, but there's a way people made money in which people who bought shares at first were given extra shares. Can you talk a little bit more about that and how an IPO, whenever an IPO comes up, what are some of the benefits people should look out for before the company actually becomes listed on the shares?
All right, thank you for asking that good question. So again, if I would relate it to the point you mentioned earlier, in terms of convenience, service with convenience. The MTN IPO was able to deliver on such a convenient way, and some of the success stories for that we saw the number of investors in our market more or less doubled or close to tripled because everyone could access these services off a gadget. So application for the IPO was quite smoothless and you could do it every time. That was one.
It was the first electronic IPO, right, in Africa.
So it was the first electronic IPO, I would say, East Africa.
East Africa.
First electronic IPO in East Africa. And again, Uganda came at the front for, on delivering this, in addition to it being the largest public offering in sub-Saharan Africa. And maybe also just to correct you earlier, is that MTN did not really sell shares to raise money. It was just meeting the regulatory licensing requirement that asks that they must sell a percentage of their shares to the public. And then the other question where you had spoken about in terms of the benefits of an IPO. So you find that the time a company comes to sell its shares to the public is what we call initial public offer. So you offer it to the public, people buy directly. Usually it runs for a period. MTN ran for about close to 6 weeks. After the 6 weeks period, now the company would move those shares, inclusive of the shares, into a market, what we call a secondary market. So in the primary market, I'm buying directly from the seller, the parent owner of the company. In this case, you're buying from MTN, MTN International. Now, after the offer closed, the company listed the securities exchange. Now, in that moment, you're now buying shares from me and you. So you who bought during the initial public offer, which was the primary offer, you come back to sell in the secondary market. Now I'll buy it from you. So that is just the difference.
Okay.
In the primary, I'm buying from the seller, the owner of the company. In the secondary market, buying from the people,
shareholders
who bought in the other market.
In the market, the primary.
So the benefit for that is one, there are no charges to that. I'm paying, if I bought 100,000, I'm getting shares worth
100,000. Wow.
That is the benefit. When you come to the secondary market, there are transaction charges. Just like the way if I'm using my bank account to move money, the bank charges me. Tomorrow when you come to buy shares, there are charges that you apply. These charges are guided by the regulator, which is the Capital Markets Authority. It's a standard fee. It's a standard fee across the different players in the industry. And that fee, if you broke it down, comes to the actual broker for the service they've offered you, the investment advice they provided you, and then you have an amount that goes to the regulator as well as the exchange where you're listed.
Wow.
So those are some of the differences. And again, also you find that for every time you participate in an IPO, the potential benefit in most times is the capital gain. You would see when Stanbic, I'll just speak about how it's historical. When Stanbic sold its shares for the public, first time for the public, about in 2007, the price was about 70 shillings per share. 70 shillings.
70, yes.
Per share. That price moved from 70 to close to 240. You saw the benefit. When Umeme came and sold its shares to the public, from I think about 275, the price moved as high as 600 shillings per share. So your capital gain has more or less, your investment has more or less tripled in your return. When we speak about MTN, for a customer that bought his shares using his mobile money phone, meaning that he got the incentive shares. So he bought the minimum, which was 100 shares. It was 100 shares. And then he got the incentive shares. His actual cost, if you look at the money he put and the number of shares, his actual cost was 180 shillings per share. Today, where the price is trading is 185. So meaning you made a gain of about 5 shillings per share.
Wow, interesting. Now you see, we've talked about these all these cool things about the market. But recently, I'll take you back, not recently anyway. Uchumi, for example, moved out of Uganda. ShopRite, let's say, okay, ShopRite wasn't a listed company, but let's say it was in the same docket with Uchumi. And such companies moving out of the country and maybe getting delisted could affect the shareholders. As SBG Securities, how would you handle such a situation where you invested your client's money in a company and the company is being delisted and it's maybe moving out of the country? How would you handle that, and how would the shareholder be secured from the damage?
So firstly, I would say, and bring it back to the regulator's environment, you find that for a company to come and sell its shares to the public, it has to prove the fit and purpose test by the regulator. And the regulator's work is to protect the investors. So you cannot come a company and sell air. You cannot be a company that is doing nothing, and then you prepare these nice books and come to the regulator and you say you want to sell shares to the Ugandans. and then there is no actual business. So there is a fit and proper test you have to pass from a regulatory perspective. That's why you find that that list of requirements is quite very long, and you find there are quite a number of players that participate.
Yeah.
Some of these, I'll give an example, is today if you wanted to list your company, you are required to provide your financial statements to the regulator. But then you're also asked to say you must appoint an independent auditor, external auditor, to validate and reaffirm that the financials you're providing to the regulator are actually what it is on ground. You're not cooking anything and bringing air. So you find that the regulator makes sure you pass the fit and proper test before you sell your shares to the public. Tomorrow also, if you want to delist, again, you have to go through a process.
Yeah.
You have to go through a process. And what happens in every year that our viewers out there don't see is that you're required to meet what you call the continuous listing obligations. A listed company every year is required to provide certain information to the regulator. Basically, what the regulator is doing, it's monitoring your performance, and you're required to say, if I'm coming to the public, this is what our company is going to do. You're required that you meet such, when you meet such commitments you have provided before the regulator.
You also have proper governance.
Yes, proper governance and all that stuff. So there's continuous listing obligation every year that you submit to the regulator. You're also required to publish your financial statements to the regulator.
Okay.
And these financial statements are audited by your external auditor. So there's commitment from your auditor to say that I have verified this is very true. So you find that there are measures to make sure a company that comes to sell its shares to the public has gone through the processes, and that intention is to protect the investors. So to list, you go through the same process. To delist, you go through the same process. But again, at the fact that you're an owner, you're an ordinary shareholder in this company, unfortunately, by the accounting standards or the accounting guidelines, is that once that company goes under, you the owners of the company go under, just like the majority owner is going under.
Yeah.
So if you find, say, a good example is, say, Uchumi had close to about 80% owned by a larger investor. Then you had many investors holding about 20%. When the company goes down, even the one who owns 80% goes down with that company. And that is guided by the accounting standards.
Okay. So despite the fact that we have all these scrutiny measures to ensure the company has the good books, to ensure the company is properly governed, still in case things don't happen the way you expect, how do I get the firmness, the security that my money is safe? I can get back my money and I know my money is safe with SBG.
So yes, so the only way that can actually apply is that when you invest your money into SBG investment products, which is, say, the unit trusts, we make sure your money is safe because we invest in assets or instruments that are secure. We don't take your money.
Don't take the money to risky environments.
Yeah, so we don't take the money and go and say things like betting. We don't take your money to go and bet.
Yes.
We don't take your money to go and bet. We purely invest in products that are also regulated. Yeah. And the constitution that we submit to the regulator to approve guides us and tells us you can only invest in this and that. So we have internal audit processes. The regulator also audits us and makes sure we invest within the guidelines. Yes. So we invest in very secure instruments.
Wow, interesting.
So your capital is safe.
Moving away from that, we see that the Ugandan market always opens at 9 a.m. and closes at 1 p.m. And other markets elsewhere, Nairobi, they have different time zones and so on. So let's say the market is closed. Do you also close business or you still maintain the transactions?
Yes, so that's a good question you raise. Again, remember that we trade in different markets operate in different times, different time zones as well. So in the Ugandan market, it opens 9 a.m. and closes at about 1 p.m. That does not stop you from investing in a market that operates up to beyond 1 p.m. A good example, Tanzania closes at 4 p.m., opens at 9 and closes at 4 p.m. Nairobi opens at 9 and closes at 3 p.m. So you can still trade in these different markets and without any limitation. So we are still available, open to service you for those investments. But away from that, if you wanted to invest in unit trusts, which are very secure, more or less secure investments, is that we operate between 8 to 5 p.m. and we're able to service you.
Wow.
Yeah.
And then still on the same issue of closing and opening of markets, why is it that if the market closed yesterday, it had a certain price, and of course the market closed, and when you come back the next morning, it's a completely different price,
Yes.
the bid and asking price.
Yes.
What could bring the contrast? Why the difference? People could wonder.
All right. Thank you for that good question. Just like a normal market, you have demand and supply prices. They move up and down every day based on the demand and supply forces. So like our market, you find that you have an opening price and then there's a different closing price. But most times the closing price is a view up. So you find that the next day when market opens, for the aspect of true transparency, you have to provide an indication where the market is.
Yes.
So you're required, the guidance to say, if today we close at this price, tomorrow in the open, this is where we're opening. Then based on demand and supply forces in that specific session, the price could move up and down.
Oh, interesting. So it's like our products in the normal markets, where the higher the demand, definitely the higher the prices. Okay, good, interesting. Now I'd like, as we wind up, Mr. Ngura, there are people who are not Ugandans that also want to invest in either Uganda or other countries. Do you have provisions for such?
Yes. So we allow.
Because you talked about the national ID. Probably yes. I don't have the national ID.
No. So we're not very limited to only just Ugandans.
Nationals.
Yes, we are. As we see, we're an international company and we operate across the globe.
Borders.
So we don't limit you. A non-Ugandan is allowed to participate in this, and again, the non-Ugandan also is allowed to invest in Uganda as well as globally.
Yeah.
Through our Ugandan office.
Oh.
Yes.
Yeah, wow, interesting. So there you have it, ladies and gentlemen. This is an opportunity for you to actually get to invest with SBG. He has tried to break down everything that you need, the SCD account, the people you need to approach, how they operate, how they manage their risks and mitigate all these other limiting factors. So you have no excuse but to invest. So Mr. Ngura, as we wind up this segment, I'd like to give your parting shot and maybe encourage people out there to save with SBG and invest.
All right, as well. Thank you. To our viewers, my takeaway is one, we don't know how tomorrow turns. So I encourage all of us that every day when you take up the savings culture, it's not really only for the rich. At any what category of our incomes, we can still invest in these products. And when you start investing, you find that your future, you secure your future. So it's very important that I encourage all of you, reach out to SPG Securities. We are at Crested Towers, ground floor, plot 17 Huntington Road. Alternatively, you could reach us on mobile, which is 031 222 4965.
Wow. Thank you, Mr. Ngura, for your time, and thank you for giving us this quality information about saving and investing. So our dear viewer, as you have heard it from the horse's mouth, saving is good, but investment is better. And if you want to start your journey of investment, one way is through SBG, as he has told you. You can always start with them. You can go to their offices and make consultations. They have financial advisors, I believe. If you want to know some advice on how to invest and how much you need, you can get all this information. Again, this show is up to giving you the latest information and first-line information into your investment, portfolios, and to get to know exactly who to approach, the right people, and exactly the figures that you need. My name is Anthony SSEBAALE. You've been a very good viewer today. I hope to see you tomorrow or the other day. Have a blessed day, and bye. Okay.
Oh, time runs so fast.
Yeah.